Well, welcome to Plugged In, a brand new 21-minute podcast for those seeking the insider scoop on what's strategically moving the financial services forward. You know, we're serving it up with the gonzo banker flair that you've come to expect from your friends at Cornerstone Advisors. So I'm your host, Al Dominick, and I'm joined by my partner in crime, the very famous Steve Williams, where together we're going to geek out on the intersection of ideas and opportunities happening across the banking landscape today. Think of us like your old school Sports Center hosts, where the two of us are going to try to hit the high notes with a little bit of wit and wisdom on things that you really want to know about today. So, Steve, nice to be checking in with you like we are.
You betcha, Al. We're always kind of crossing paths on the road. I know you've been a lot of places. I've been, Northern California, Florida, Connecticut, Chicago. How about yourself?
Okay, so you're keeping the airlines in business. I think I'm doing the same because I've been to Canada twice. Let's see where else. I saw you in Chicago, been in Nashville. I'm holding it down in DC right now. Of course, I was in the mothership, Scottsdale, Arizona, which is where Cornerstone's headquartered. And along the way, we've had a chance to, see and speak to some really interesting executives that are pushing the boundaries of what's possible right now. And I think you and I wanted to use this inaugural podcast to tee up 5 areas of growth and change that we think are really relevant to banks of any size and really to any organization that's looking to differentiate and diversify the way they do business. We still good with that concept?
Let's rattle them off real quick, and then let's tear into each one individually.
Yeah, you got it. Because, at Cornerstone, we like to talk about being wildly prescriptive. And, this isn't like you're going back to school. We're going to give you the answers to the test before we even ask the questions. So there's 5 things that Steve and I have really made note of over the last few months. And we'll talk about things like the twin towers of transformation, why every basis point counts. How do you think about technology from a performance management standpoint? What this whole concept of scaling smart entails, and why it's so important today that we depoliticize ESG. So those are the 5 basic, points that we're going to, tease out in this, 21-minute podcast. Steve, do you think we could take a few minutes to talk about the first one, this twin towers of transformation that we're seeing taking place? First, maybe by defining what the towers are and what they look like.
You betcha. And I'm going to give a shout out to a great CEO, Mark Hardwork at First Merchants Bank out of Muncie, Indiana. I was trading notes with him earlier in the year, and he said, I just got back from a CEO conference, and every CEO is going through 2 transformations, a tech transformation and a talent transformation. And it really dawned on me that those 2 twin transformations is what we're all grappling with right now. And they're also very intertwined right now. As one example, Al, the unemployment rate for IT professionals is 1%. So everybody started demanding IT professionals after COVID right when, we needed more of them. So we're struggling with that. And how do we, have speed to market? How do we get going forward? But the other side is obviously workplace. And what does that next gen workplace look like? So to try to transform from a technology and experience standpoint while you're trying to transform the workplace at the same time. As I like to say, easy as a golf swing.
You haven't seen my golf swing. It can get a little funky. But this whole Twin Towers concept, I want to give apologies to anyone down in the Houston area that was hoping for a Ralph Sampson, Hakeem Olajuwon take. But it's so interesting when you marry this idea that everything analog is going to be digitized. That's something that we heard Nigel Morris, who runs QED, mention in Chicago. And so the concept of, digital being a journey, not necessarily a destination when it comes to banks, I think is really important to, take hold and make sense of, because you only can go so far with technology as the team that you have in place. And so if you think about culture and how you've got to get your culture right before you get your operations correct, well, if you get your culture and operations going, then you can start to think about your financial performance. From financial, you can start to satisfy your shareholder and investor base. It kind of falls in line with that old lean startup concept that Eric Ries wrote about, which was all around people, products, performance. So I think it's really important as we think about the world that we're in right now, that we don't try to divorce the technology with the talent, because there really are, as you said, Steve, intertwined.
Yeah, and I think to us, here's some prescription: is you're going to have to buy some talent, transformational talent. So we see our execs out there mixing the gene pool with new people from Google and digital banks and other industries, bringing in data scientists. So that's kind of the free agent buy. But we're also going to have to build more technologists internally. We don't have enough of the market to give us for the next decade. So I see some of my clients starting to take folks from the branches, from the contact center, get them more enfolded into IT and digital. So I think you have to do both on the talent side. The other thing really important is our Gen Ys and Gen Zs, they're going to shop with places and work at places that represent good corporate values. So we'll talk about that later in ESG, but creating that workplace is how you're going to have the transformational talent to execute on how do we stay relevant.
Yeah. So, staying relevant, again, is one of those themes that we've heard in the past. We're going to continue to talk about it going forward. But I want to switch from the towers of transformation to this idea that every basis point counts.
Mm-hmm.
You and I, again, we've shared a few cabs recently, and we were, brainstorming this idea that if you could save a basis point, you can do some pretty meaningful things. You want to talk a little bit about this concept of every basis point really mattering?
Yeah, I like to joke, Al, if we're not having some good arguments in the asset liability and pricing committees right now, we're doing something wrong, because this has been a crazy time of volatility in 2022. The budgets we put together last November are obsolete. And we've seen one of the fastest rises ever in short-term rates from the Fed trying to combat inflation. The first 6 months of the year, we had the worst stock market and the worst bond market in parallel in 50 years. So we're seeing a lot more focus on active balance sheet management and making those bets. And a lot of the profitability of the banks going forward is going to be how well can they keep their funding costs in line as rates go up, the equivocal deposit beta. And what I'm seeing out there, Al, is just people realizing that we've got to be much more disciplined with analytics and pricing and how we look at the overall balance sheet management and the management of the bank. When there was no cost of money, it was much more operational, much more sales and growth driven. Now you got to dial in that profitability and risk as you looking to grow the bank.
Yeah, and I warned everyone who is listening that we're going to nerd out about some things. Let me give you some shorthand calculations when it comes to a basis point.
Yeah, so a $10 billion
A
bank, a
$10 billion
basis point
bank.
is
Yeah.
$1 million. And Al, what would you do with $1 million if you had it because we'd knocked out another small basis point of net interest margin?
Yeah, I'd be looking for some of these digital account opening, players
Right.
that, probably for 1.5 million, you could do something really compelling, and you can build some, new, gathering opportunities that's going to, again, just make you more relevant and more compelling, because you've been able to reduce in some places and redirect to something else.
That's it. Yeah. So when people say we want to change, we just don't have the resources. Well, we've got to bear down and look in every nook and cranny, both of how we actively manage the balance sheet, and then we'll talk about how we actively manage our legacy operations today on the next topic.
Yeah, and the next topic is all around performance management, and really we'll call it just technology performance management. When Steve and I were in Chicago, we were spending some time at Tom Brown's Second Curve CEO retreat, and we were hearing about kind of the state of fintech and what's going on there. We were hearing about applications of new concepts and investments that people were making to really create a more holistic digital experience. This is one of those concepts that it sounds kind of catchy, but it has so many just nuances to it that I thought we should just dig into technology performance management as we sit here in October thinking strategically about what the next 18 months could hold.
Yeah, absolutely. Al, to me, what comes across, I like to say to my clients is up in the C-suites where the power resides oftentimes and the resource allocation. We're in the midst of our next M&A deal. We're in the midst of what does credit quality look like? We're in the midst of our budget variances. Are we in the midst of technology and the customer experience? Not as much. And so to me, a lot of the next decade is how do we bring more visibility with tech and digital and the client experience into the C-suite so we can allocate resources properly, bring in that transformational talent. And it really is interesting to me how little we really know in banking about how much we spend on technology, about where that tech spend is going, what kind of outcomes are we giving. You and I recently saw Brian Moynihan, the CEO of Bank of America, speak. And one thing I love about Moynihan, and I encourage everybody to go out to his quarterly investor decks and see that he ties technology to business outcomes. So he's very proud that recently the consumer bank is originating 50% of its sales through the digital channel. He's very proud that there are more Zelle payments now than checks processed. To us, that's how do we start bringing those outcomes for the business and creation of shareholder value to the tech budget, to the portfolio of vendors that we manage inside the bank.
Yeah, and getting granular, getting gritty, that was something that Mr. Moynihan, showed first, hand as he talked in really incredible detail about his, bank's performance. But, you mentioned payments. There's something on the side that we have to acknowledge. There's some really crazy stuff happening in the world of regulation that's going to impact, the performance of banks and, their income opportunities. Can we just take a slight detour because we're talking technology performance management? You were right in saying we've got to think about business outcomes, not necessarily the activities that we're, chasing after. But, sometimes there's things that happen while you're still going to work every day and we're
Right
out
on.
of your comfort zone. And all of a sudden we're hearing like, this, what is it, Reg 2 or Reg II that's
Right.
coming from the Fed?
Yeah, we've had some new rulings on Reg II really related to card not present transactions and the need for a second network. I won't get technical and geeky here, but we've got some great experts in Brandy Gregory, Tony DeSanctis, and others at Cornerstone who really dig into this all day long. You have that coupled with a bill in Congress related to credit card further regulation of interchange. So definitely it's under fire, Al, and we encourage our bankers out there to really engage in this stuff. And more, we got to keep maturing up. What is our payment strategy? And who are our payments executive and product owners inside the bank? It needs much brighter light than maybe we've had because it's been a nice source of revenue and non-interest income for banks for decades.
Yeah. And, we've talked in years past about banks needing a payment strategy. This is just putting a light right on the idea that if you're not talking about it, if you're not really understanding where there's opportunity and also risk, you're missing a big opportunity.
Yeah.
All right. So, Steve, we live in this world, this banking world of ours that's been marked by consolidation. It's just wave after wave. People have talked about this for years. It's an eat or be eaten type setup. And that ties into this concept of scaling smart. And so I want to talk to you a little bit about this because there haven't been M&A deals struck of late, but we know at some point we're going to start to see some mergers of equals return. We're going to see some straight bank on bank acquisitions. You're going to see maybe some specialty opportunities pursued, like we found in past years, where healthcare type organizations were brought into traditional financial institutions. Talk a little bit about this concept of scaling smart.
Yeah, we talked about geeking out on data. So I went to banks today between 5 billion and 50 billion across America, Al, and I looked back at those same banks and said, how big were they a decade ago? And the median was about 1/3 of its size. So these banks have tripled in size over a decade, a combination of organic growth and M&A. But what's interesting is how fast that's been. And so they're getting big very fast. They're getting busier and complex very fast. And I think what's interesting to look at is they've done a good job on their efficiency ratio. They've actually lowered the efficiency ratio during that decade of growth and consolidation. However, I think a lot of that efficiency ratio was that they did bigger lending deals. They leveraged the balance sheet. They had a very nice time of low-cost funding. And so that gave some great revenue lift into the balance sheet. At the same time, I don't know if they matured marketing and digital experience and enterprise risk and analytics at the same pace they grew their balance sheet. And I have a lot of CIOs, COOs out there looking to how do I mature how I operate as a bank now that I grew so big so fast. And to do that, you've got to, the old adage, I've got to run the bank while I transform the bank. And I also have to merge the banks that I acquire. So there's almost 3 paths of work that folks have to do. And it creates a lot of gray hair for the folks in the back office. And I think what's really important now is how do we apply automation, analytics, process design to do this? There's a bit of catch up to do in this crowd of regional community banks out there.
Yeah, and as you're saying that, not to be lost is the idea of culture, 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 and culture. Because, as you scale, one of the things that was shared with me a few years ago by the CEO of First Horizon, who was in the process of, acquiring Iberia Bank. And just as a tangent, now TD is in the mix. And so it just keeps getting bigger and bigger. Is as you grow in size, you become further away from your clients that helped you get to a certain place. So, yes, this is an industry where size and scale absolutely matters. But you also can't lose sight of the fact that you got to maintain your culture, you've got to maintain your identity. And that is a challenge. And there's the numbers that you talked about, there's the efficiency, there's different ways of thinking about who you want to be, not necessarily who you are. And I think as you scale, that's one of those hard conversations that, bank boards in particular have to take count of, because yes, the industry will consolidate. Yes, there will be opportunities to grow, but it's no longer defined by just your geographic reach or presence, because your community is not what you make it. It's not necessarily where you are.
And I think the ones that scale, two things I've seen over the years of a great company or bank that scales. One, they have a great middle management team. These folks know how to manage change. They know how to build process for scale, not just fight fires. And secondly, you can almost judge how well a scaling company is going to do by the relationship between the front office and the back office. If it's viewed as a partnership, it's engaging. There's a lot of compromise and design thinking going on. Great. If it's dysfunctional and antagonistic, you probably have peaked as a franchise. So looking for that real partnership between front and back office as you scale is important.
Yeah. Well, you talk about dysfunction. There is some dysfunction that I note when I walk around Washington. And actually, I
A
could I
little.
could cite a lot of things that are dysfunctional in our nation's capital, which is a great place to live. I'm not throwing any shade at a home of 17 years, but it does strike me that this whole concept of ESG has become a political hot potato, which is incredibly disappointing, because there's so much opportunity and upside for banks if you could just take the temperature down a little bit. So we think, again, Steve and I, as we've been on the road and we've been talking about these different issues that, are front and center for folks, it would be unfair not to acknowledge that elephant in the room. ESG, whether you like the concept or not, it has become such a political, issue. I think we've got to depoliticize how we approach this. And Steve, I think you said it best as we prepared for today's pod.
Yeah, well, one thing I think that I'd be happy to report, because I go board meeting to board meeting, town to town. I think the sincerity out there among the banking and credit union industries even is sky high. This is not being viewed by the board or management as a check the box, as a compliance, as an eye roll. There is a sincerity like, how can we really have impact? And for a lot of regional community banks, this has been in their DNA for some time. They're just trying to understand, how do I start to really build this into how do I show impact to all stakeholders, not just shareholders? Al, I think what everybody's a little worried about is if it gets too brittle in terms of technocracy. I've got to meet these very specific check the box requirements, and that's going to define how good of a corporate citizen is versus how can we really, show that meaningful impact. And I think there's a real opportunity out there. But what I'm most encouraged by is I see executives wanting greater diversity. I see executives wanting to show more community impact. So I think it's becoming less antagonistic, the community benefits agreement, and more so bringing in some folks of different perspective to say, let's really show some impact.
Yeah, I totally agree. And I think, keeping anything from becoming brittle should be a job of a leader. You want to have flexibility. You want to have the ability to bring in diverse thoughts and perspectives. We've seen repeatedly that, when you have a diverse leadership team, you have better financial results than your peers that don't have that same level of diversity. So it's not just a feel good exercise. It's something that can, again, strengthen your business. It can position you to be more attractive to the communities that you serve. And again, we just think if we can take the temperature down just a little bit, there is great opportunity for us to have some really cool conversations. So,
Yeah,
okay, we've hit on 5 things, and I think we might have time for a quick bonus round, if you're game. What do you think? Quick bonus round?
I'm game. What is it? What's the bonus round? Guess your weight?
So, no, it's becoming more and more clear that if all you've ever done is all you'll ever do, then all you'll ever get is all you've ever gotten. It's one of those old cliches that rings so true right now. There's three things that we find that aren't necessarily working that 6 months ago people were really excited about. First one is crypto. Second is buy now, pay later. And the third one is all around this whiz bang, artificial intelligence and machine learning stuff. So, those are three things that I don't think we want to sleep on, but I think we can kind of move them back a little bit in the conversation queue. Is there anything else, Steve, that you think you've heard that people need to continue to prize, not necessarily to put aside?
Yeah, that's a great question. I think on all those things you just mentioned, the discipline we need as bankers is don't just poo-poo them as competition that has funding today or doesn't tomorrow or has issues today or not. I think it's what are the use case blueprints that these entrepreneurs are showing? They're trying to build better mousetraps, and we should always be looking at those blueprints. So in the case of buy now, pay later, point of sale is not going to go away. Some degree of convenience at the point of sale. So we have to use that as a blueprint. For crypto, I think the horse is out of the barn door, and we're going to enter the era of regulation of crypto. And obviously, it will continue to be part of it, but it does give us a chance to play the long game, not to panic on those things. What strikes me loud and clear, though, Al, as we sit here this morning, our digital experience when it comes to a storefront, how we generate loans, mortgage, consumer, small business, how we open deposit accounts, how we onboard new customers and engage them in self-service that's not just check my balance. It's replace a card, do something with a beneficiary. There is so much efficiency still to gain in how we do digital sales and digital engagement that I can't understand why we're not all hands on deck getting that done over the next few years, because that's a no regrets investment and it's a no regrets capability to have. And we all have C, B minus experiences today.
Yep. Well, no regrets on my end for spending a little bit of time talking with you, Steve. This is fun. This is the first of many plugged-ins that we're going to do. We invite you to take a listen, bookmark, share with your friends. Again, I'm Al Dominick. He's Steve Williams. We appreciate you taking the time to get plugged in with Cornerstone Advisors.
Thanks so much, Al.